Hey traders, TG Watkins here. It is November 3rd when I'm recording this, Thursday. I actually wanted to wait till after the FOMC from yesterday because that's always an exciting thing going on. Now, I think what happened here is if you guys remember the New Wall Street Journal's article that was leaked right about here, or quote unquote leaked about the Fed maybe thinking about softening up or getting a little easier or something like that. And that's what helped prop the market up for the last, week or so. I figured that was BS. I thought that was, as they said, a leak, and I think they were just, they're testing the market, or they just needed to prop the market up a little bit. So they put that out there to help make us be the plunge protection team as traders. So that worked out. And then once that happened, everyone kept thinking, oh, we keep going higher from here, or it seemed like traders were positioned to go long based on whatever the FOMC was. But I was looking at the Dow, and the Dow, I think, was really the key, because if you guys look here, this area right here before Wednesday or leading into Wednesday was extremely overbought. It's exactly the same situation that was back here. Now, the Dow was the highest, then it was the IWM, then the SPY, then the NASDAQ, okay? So it looked like the SPY was not overextended. Sure, that's the case. But the Dow was, and the Dow was unlikely to go much higher. And so proportionately, all the other indexes would move in the same way because they all move at the same time in the same direction. They just move in different amounts, different proportions. And so the Dow was the key here because it was unlikely to go any higher. You could also see there was a huge gap here on the hourly chart. Plus, you could see that and that looked exactly the same. And then if you looked at the 15-minute, the 15-minute looked the same, all except for this little pop that we had because of the FOMC. And that's the FOMC for you. Crazy things happen. You get a wild move, and then it's like the other move is the real one. You could also see that the Moxie indicator was below zero, and with price over the 15-minute 50, that was an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. Now, of course, I never know how big the move is going to be, but I could tell you that that was unlikely to be a legitimate long move. The other thing that I had been looking at that told us to, either don't be long or be real careful out there or something, is the UVXY. And you guys know that I like this one because the UVXY is the leveraged ETF of volatility. Now, the VIX is kind of weird. The VIX itself has been very, very weird, but the UVXY I like better, and it's been trading better. Notice that there was a giant gap here between price and the daily 8. It was also on the third ATR, and there was also a giant gap here between price and the hourly 50. And then look here on the 15-minute time frame. On this last down move, you could see that price staying underneath the 15-minute 50, but leading into this, we started to get price over the 15-minute 50. And then also notice the straight up move on the Moxie indicator, plus the Moxie indicator being nice and tight. So that was everything that was telling me that this thing was likely to move up. The market was likely to move down. Yes, there was a crazy move because of the FOMC, but it ended up reversing after, 45 minutes or maybe an hour or something like that, and then ended up for the day. And now we're just getting follow through. Now, I would not short here. I think the move is going to be done today. Here we go. We got the move. And there's a little bit of follow through today, sure. But I would be extremely cautious about trying to short this market because, it's kind of, I think today might be the day. We'll see if this runs out of steam today. But this is getting to a point where it's extremely stretched to the downside. And I would be very cautious about trying to short here. I think this 2-day drop, you don't, get too much more than that before something else kind of snaps back the other way. All right, hope you guys enjoy that. We'll see you at the next one.
Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.